to the Property Frontline. Today, I'm here with Scott Hochgesang, and we're covering off our very first episode of Market Watch. And what we're going to do is look at what's happened in the past in the property market to date, and then what's going to happen in the future, and what are the influences on where people should buy and what will be happening with prices. So, Scott, do you want to say hello?
Hello, everyone. Welcome from sunny and very cold Sydney.
Yeah. Yeah, but at least it is sunny. Okay, so I'm going to share my screen. Hopefully, share the right thing. So, what we're going to do is look at market price performance for the data collected to the 31st of May 2024. And this is something that drives Scott and I crazy. We'll look at the market overall, but what we wanted to first of all cover was just looking at one line of data across three of the major data suppliers of PropTrack, CoreLogic, and SQM Research, and just look at the difference in the estimates. So, Scott, do you want to cover off? Will we talk about Sydney first? Or really, we can only talk about Sydney. Yeah.
Sure. Let's jump right in. I mean, we've got the latest house price growth stat there, just slightly under 0.5%, and annual growth of 7.6. And they're reporting a median house price a house price of 1.413 million.
Yeah. Okay. And then when you look at CoreLogic, can you see that, or should I make it bigger? So Sydney.
I make it bigger, but I can actually see it off I've got a printout of it here, so I can actually see it.
All right. Okay.
Yes. So, kind of interesting enough, if we go to those exact same stats for CoreLogic, they're actually pretty close. They show house price growth of 0.5%. The annualized figure was 8.2. We're off about 1%. And that median house price of 1.441 million. So we're kind of pretty well on track on the ballpark.
Yeah. Then when we go to SQM.
So SQM shows asking prices for properties. So these are not necessarily the actual sales prices of properties, which could be one of the reasons for the difference. But Louis Christopher shows stats with a median house price of 1.92 million. So we're literally looking at a class of properties that's about $500,000 higher than the other two sources, and it just kind of leads you to the question of are we looking at the exact same set of data?
Yeah.
The growth itself was actually pretty close. 0.5% for the month, 7% for the year. So it feels like our data providers are all sort of giving us a similar message in terms of the growth rate of houses in that market. But certainly a vast difference on that median price.
But I guess that's the confusing thing when people are really data driven. This is at a very high level, and once you get down to suburb by suburb pricing, it can be quite misleading, can't it? Looking at Sydney generally. So even with the big change in the way SQM is reporting their prices, like if you went by their data, you'd be expecting to pay potentially a lot more for a particular suburb if you drilled in. And I think that's why some people just, like, they're obsessed with data because it's solid. And yet, the numbers can lie, can't they?
Sure. And I think they can obfuscate some things which are kind of buried below that layer as we dig into that. All sorts of differences in terms of the mix of properties and what is that median property being referenced. The data sources never actually tell us that. And in
mm,
all the media reports, yeah, I was just thinking about this today. All we hear is prices are up X%. They never say the median price for this area is up X%. It should cause you just to hesitate a little bit, I think, because
mm,
this data that we're looking at is a particular segment of the market pre-selected as the median, and there's no guarantee that the data sources are referencing the same property, or even that you're
mm.
looking at something that has the same number of bedrooms or is the
Yeah,
same size as the one from the previous period.
yeah. And what drives me nuts is you'll get these hot suburb lists, and they're like in Timbuktu because Timbuktu has sold two properties, because there's only, or two properties out of 100, whereas in the Sydney market, you might be looking at a more reliable predictor of median, because there's, like maybe 400 out of a suburb of,
Sure.
5,000.
And
So,
I did pick this out of the CoreLogic data. They actually will throw away suburbs where they don't have 20 sales in that period. So they're effectively telling you, look, this is just not reliable. When
mm,
you've got a small number of sales in that area, and just one or two big sales can give you a totally
skewed.
misleading view on that market. And the property marketing people will pick up on that as well. You may see somebody touting a market with a big number attached to it, and in fact, they found a very high result that's not representative of the market as a whole. Um,
Yeah.
Very careful in terms of the growth rates being touted by people out there.
Yeah. And so while, you can use this information as a little bit of data on what has happened in the past, to actually get a real read on the market, you need to drill down, really.
100%, and review multiple sources, and kind of keep going back to them, I guess, and figure out who you're feeling is trustworthy. Weight their opinions a bit higher in your head as you're analyzing these. And this is what trained professionals have been doing, for years. Our brains are calculating these things in our heads and trying to decide which things we want to pay more attention to, which ones will weight less. And often it's because we'll remember that data source has not been that reliable in the past.
Yeah. And similarly, there's some people who are like really just trying to push a particular market, and they will produce these lovely, gorgeous research reports. Those are the ones that I never trust.
Let's
'Cause,
yeah, let's produce stats which give us the result we're looking for, which tie back into our business objectives. 100%.
yeah. All
And
right. So, end of lecture.
yes,
Uh,
all right,
so,
let's continue on.
yeah. So, let's have a look at the market overall. I might just zoom out a bit. Um, yeah. So once again, data, it is CoreLogic data, from calculated to the 31st of May. And so do you want to add your views about this?
Sure. Look, I think our view of the market is we're looking at a three-tiered market at the moment across Australia. I've sort of coined the term the BAP cities. It's Brisbane, Adelaide, Perth. They sort of seem to be moving together and have been for some time.
Yeah.
Very
So
good
it's
growth rate.
Brisbane,
You know,
Adelaide, and Perth. Yeah. Good
yeah,
growth rate. Yeah.
1.4, 1.8, 2%. I mean, those are basically 20% growth rates per year.
Mm,
Interestingly enough, all three are also up about 60% since COVID. So
yeah.
kind of running in parallel. And the second tier we would say would be Sydney, which has definitely shown some growth at times. Probably put Canberra in there because the two
Yeah.
of them will often act a bit together. And our third tier would feature a sort of lagging market, Melbourne, which we can get
Yeah.
into the reasons why that market is lagging, and Hobart and Darwin, which honestly nobody seems to be paying very much attention to these days. They're kind of quietly
Yeah.
sitting there and almost floundering.
Yeah. And so is there something that you would like to say about that, or can I wade in with my,
I sure. Yeah, you've got something
let's
you wanted to
argue?
say about Melbourne, I think.
I did, but before we get there, so what I'd say about here is I've always said Hobart was like a disaster waiting to happen. And because it's a retirement village. Like, you haven't got young families going down there in a really big number, heaps of jobs and
Mm.
lots of industry. You just haven't. And so Hobart is starting to show its true colours, really, in my opinion. And I think Adelaide's going through a blip. Like it's going to reach a ceiling, and then like there's just not enough growth drivers. So I think that's a mirage. But Brisbane has got so much heat under the surface. There's still so many people moving up there, and so many people wanting to move up there. And similar with Perth. So Brisbane and Perth have got all of those really good growth drivers. So lots of families, lots of jobs, and reasonably supportive and proactive government that's putting money into research, infrastructure. But of course, Melbourne. Melbourne is an experiment in disaster, really, because what's happening there is the opposite to, these more active areas. The government has just looked at property owners as the villains. Like as soon as you buy a property in Victoria, you're considered to be the bad players, and so they'll go after you for as many tax dollars as they can. They've
Sure.
made the legislation, they've changed the legislation so that property owners have less control over their own property. And what has actually started to happen, like absolute trend line of people selling out of Victoria, generally Greater Melbourne, selling out of there. And sure, some home buyers have been able to pick up some properties, which is great. That means that there's less properties to rent. So rents are going up, and it's going to have this downward spiral effect because rents are going up. So tenants can't save to buy their own home. But when they go to buy, there's more properties on the market. So prices are going down. So the overall wealth of that state is going down the drain.
Yes, I
Thoughts on
think
that?
um look, I would concur with most of it. I think they are going to require a change in government to really see some real change there. And I do see a few people who are sort of bottom fishing in that market now. It's a
Yeah.
risky strategy to try to time a market bottom. And I think we both feel why do you want to do that with so many other great opportunities out there? Um, why
Mm,
why take the risk? When's the turnaround going to happen? The land taxes themselves are for a 10-year time period. So unless there's
mm,
significant government legislation to roll those back, you're going to be hit with those extra land taxes, over a 10-year period. Um,
yeah.
poor Melbourne.
For Melbourne. But on a happier note, there is still plenty of opportunity in other areas of Sydney. Okay. Is there anything else you think we need to cover at this level?
No, I think that was pretty good.
Yeah. Okay. Alrighty. So that's what's happened, to date and in the past. So that's something else that we need to remember is that the sales data, that's not a predictor of what will happen in the future. It's just a record of what's happened in the past. And as you and I know, things can change pretty quickly. So
Absolutely.
to decide where to buy, what we need to do is look at leading indicators or influences in the market and we'll cover these off in a couple of different episodes. But today we thought we'd talk about housing supply. So let's just kick it off and talk um, about supply in general. Is there anything that you would want to mention yourself, Scott? Without notice.
Look, I think just at the aggregate level, dwelling approvals are running well below 5-year averages. We're clear
Mm,
nationwide not producing enough properties, and you can see the immigration levels continue at high levels. It's sort of the perfect storm of a rental crisis, and really no signs that it is going to disappear in the short term, for certainly. Here we've got a bit of a drill into the Sydney market, I believe.
yeah, yeah. So Australia-wide, when the federal government got in, the Labor government got in, so that was 2022, I think. And they set a target of um, introducing 1 million homes Australia-wide by 2027. So they said 1 million homes in 5 years. I mean, that's pretty much what we were kind of on track to doing just prior to COVID hitting. So we would normally have an increased supply of around about 200,000 new dwellings each year, sometimes more, sometimes less. And so, Labor comes out and says, "Oh, we're going to do this for you." And it's like, well, that was very misleading. So nothing
Well,
really.
if there's a shortage of something, we don't just go back to producing as many as we always have produced and think that's going to solve the problem. So yeah,
Yeah,
logically, I think we all read the announcements and thought, even if they achieve these targets, it's no guarantee we're going to get back to any sort of equilibrium.
no, that's right.
And of
But,
course, we can talk
yeah,
about what is really happening in practice. Are we making any progress at all, even at getting up to that target
no,
level? Or no.
no. So I understand that we're like around about 150,000 for the last couple of years, so we're behind.
Yeah.
And so what government has now done, so federal and state are, this is at the top of their agenda for various reasons. But yeah, so now they've set these new targets, and earlier this month, so in June, the New South Wales government announced that their target for the next 5 years was 377,000. We should have put this in stats, but anyway,
Yep.
but let me take one step back. So this year, in the federal budget, they said they were aiming for 1.2 million homes within the next 5 years. So that's by 2029. And that is right, isn't it?
Yeah.
One,
Yeah.
two, three, four.
That's one.
um,
That's the
yeah.
top.
And so, but New South Wales has got the lion's share of the target. So they've committed to introducing 377,000 new dwellings in and around New South Wales. So they've been quite smart about it because they've looked at the things that get in the way, and what they did recently was identify these areas. They call it the Transport Oriented Development Program. So they've selected areas where there's good transport, and they've rezoned around those areas. And so they've set these different targets, and then and so, like, you can see, this is a heat map produced, I have to say, by Sydney Yimbies. So you can see where there's a lot more supply going into the different areas of Sydney.
Mhm.
Um, and like even stepping out a bit. So we're a lot more going into the Western Sydney area, which is where we need it. So there's of course going to be winners and losers in this. So they're going to have some areas where, and we've seen them where previously you might have a unit block that is only 7 stories high. One that we've been looking at has been rezoned to be 60 stories high.
Wow, that's
Um,
a lot of
yeah,
units.
so right across Sydney in particular, but in certain areas, there's going to be major, major changes. And so there's going to be, like, you would think that would be good, wouldn't you?
Well, I'm really wondering, yeah, what's a person to do in that situation if I own a property now near one of those transport hubs? Is
Yeah,
is that good for me or is that, not so good? And maybe I'd want to be thinking about putting my property on the market. Is there any
yeah.
way to come up with some determination of that, Deborah?
Yes.
Yeah, wave
So
magic ball and crystal ball says what?
oh, well, it's all to do with zoning. So you can definitely find out whether your property has been rezoned. But the trick is, where is your property? So if you're located in an area that has been rezoned to a higher density, that could be like absolutely horrible because you might enjoy living, in your home, but you don't want to be surrounded by all these high rises.
Yeah.
And the worst would be if you were across the road from the area that had been rezoned. So yours is still worth the same, but you're going to be staring at these high rises
Yeah.
in the shadow. And plus, like you were saying the other day, like you've got to live through the construction period. Like how long is that going to be?
They probably,
And
yeah, 10 years in some of these areas, to put up many, many towers of units.
yeah. So you've really got to think about your own situation. On the opposite side of the coin, though, if you're looking at buying, well, then you would be absolutely crazy to not really understand all about zoning and what's going to happen to a property. So you must always find the zoning outline in every contract in New South Wales will actually list it,
Hmm.
but the little twist, so you've got to find where that is on your 10.7 certificate in your contract, understand what the zoning means, but also be mindful because there's still more changes to come. Because only last week, the New South Wales Treasurer said proudly, "Oh, we've found these 44 surplus government sites where we're going to build 30,000 homes." But they didn't say where these
Where they
places were.
Yeah, it sounds like social affordable housing as well.
Yeah, yeah, which is
Yeah.
fine, like we need it. Nurses, teachers, emergency
Oh,
workers. So
100%.
yeah, like they've got to have affordable housing. But like, don't make that announcement and then not say where these locations are. It's very poor form.
Yeah,
Anyway,
here's a question for you, Deborah. How fast do you think prices rise in these areas? Because, ideally in a perfect world, we would know the announcement before it comes out, and that's considered insider information. But you would have bought, I think we've had a certain few politicians that have managed to have a working crystal ball that's allowed them to buy quite well near trains.
that's what.
But let's say the announcements are made. Do you have to buy, in that next week, next month? I mean, hey, it's 6 months later. How fast does that knowledge spread out, and how fast do the current property owners kind of realize the potential of their properties?
Well, the easy answer to that is you should try and know before it happens. And so that's why it's a good strategy to actually look at the density of the area that you're buying in. And if you're close to a train station,
Yeah.
like how close are you? And so if you're thinking about buying, try and at least get within a kilometre of a train station. So
Yeah.
the second phase of that is you really need more local knowledge to understand which way prices are going to go. And in more of the speculative areas, we'll see prices go up. Like when they announce a new rail line, prices go up. And then people go, oh, wait a minute, it's going to take 10 years for this thing to arrive. And then people can't hold. And so you can pick up a few bargains then. And
That's
then as things are developed, then prices rise again.
continue to rise as the amenities come in. So there's kind of a quick rush on the announcement and the buzz. Then the reality sets in, and if you've got your time frame wrong, maybe quite a long hold period perhaps before
Yeah.
the wave of growth starts. I'm sort of just thinking about the Aerotropolis and down around Leppington, Austral, which is an area we talk about a lot. And where are we at in that area? We've obviously had the buzz, and they're saying the airport is now 2 years away from opening. But how long is it going to take, for that new city to be built down there?
Yeah, so they are actually now starting to come out of the trough and in the upward trend. So when it all was announced, a few years ago, prices went up, then they settled back down again, and now it's a free for all out there. It's
Yeah.
crazy trying to buy. Um, but there's one more thing I wanted to say about if you own property in an area that has been rezoned or near one, the other little thing that you want to do is decide whether you want to take advantage of these changes yourself.
Mm.
So you could knock on your next door neighbour's door and see if they are interested in combining a block so that you could, get a higher yield. And then once you start thinking about those sorts of approaches, the numbers really, really increase. But one of the really interesting things that I will be looking out for is most of our suburbs that are located more closely in towards Sydney, and I would say out like areas like I would say down here, like definitely, like, let's just say Cronulla,
Uh-huh.
Caringbah is off the charts.
Yeah.
But yeah, so I would call this the inner south, and so all of these suburbs around here, like in that sort of larger ring, and to some extent, Blacktown, I think, has already been fairly well developed, certainly around Campbelltown. Um, People who have owned their property for a very, very long time and they're on a good sized block, say anything that's more than 600 square meters, but in some areas you only need 450 square meters, you can put a duplex on your block if it's, within the area that has been rezoned. Um, and if you're a mum and dad who've raised your family and now you've got grandchildren and you love where you live, but you don't want to, you've got to sell your property to actually get like access the value or access the cash from it, really think about doing a duplex, because as long as you're in the right hands, all you have to do is move out while they do the duplex, then you move back in, you live on one side, either rent out or have, the kids move into next door. So we will be seeing this really start to happen a lot in and around Sydney. And whatever happens in Sydney, we're going to see that happening Australia-wide, because we've got all these people coming into the country and we've got to put them somewhere.
Yeah, I think
But
we're
yeah,
all, the large backyard, is really becoming a thing of the past, and
yeah,
be a bit sentimental about it, but at the same time, people want terrace style housing close to our city centers. A lot of units are going to be built, but there's still many, many people that are looking for that single level townhouse terrace style housing. We've been doing a lot of it up in markets like Southeast Queensland for some time. Even starting to see a bit of a change out in Perth, where people have had those single-story houses on big blocks, and we're starting to see that two-story terrace type housing show up in the duplex projects.
Yeah. And that's what I was going to say too. Like with the type of work you do, like you will really hunt hard for those properties that have got that extra potential. Like so what were you telling me about the other day with the Fonzie flats? What was that about?
Swansea Flats. Well, it's
Oh,
an
Austral. Yeah.
Oh yeah, I actually we often are out spending time driving around in markets. And my last drive around Austral, just some horrendous units built on top of garages. We call them Fonzie flats. I'm quite familiar with the products. I'm actually built a couple myself, but not in Sydney. And sent a few photos. I think I sent one over to Deborah and a few other people, and they were just tiny little boxes on top of garages, and we wondered how some of this stuff is even getting built. I mean, it's getting built because there's such a demand for 1 and 2 bedroom housing in these areas. So if we can squeeze another dwelling on our property, we can rent that out, but at the
Yeah.
same time, there's going to be a pushback from the governments if a lot of that happens, because they do not want very, very small, housing like that to be built. That's really not that nice for its residents. It's maybe the easiest way to say it.
But you can't like it can work, can't it? It's just all about the quality of the design. Because
Yeah.
you said yourself you've built a few on the Sunshine Coast.
Oh, certainly, and they're fabulous, and people
Yeah.
pay huge rents. People are paying more to rent these Fonzie flats up on the Sunshine Coast than they are renting the ones down in Leppington and Austral. So, I mean, there you
Mm.
go. It's a
Yeah.
very good product in a good area. It can get you a premium rent.
Mm.
So you've got to really put some thought, I think, into what's being built.
Yeah. Yeah. And we're going to see more of this come onto the market because um like we just need the dwellings, don't we? So
Sure, we need the granny flats, and sometimes they've got to go up because the blocks are smaller. We don't have the 450 square meter block to put one out the back, which is what's
mm,
happened in Western Sydney for many, many years. So we've got a terrace style house and squeeze
mm,
a nice little granny flat up over the garages, and
yeah.
really it doesn't really interfere with anyone, and
Yeah.
gives somebody that needs just a 1 bedroom dwelling, an affordable place to live.
Yeah. Alrighty. So, is there anything else we need to say in summing up, do you think? Mm, just know your numbers and your zoning.
Numbers, know your zoning. It sounds like know your neighbors. And we don't always go out and talk to our neighbors, but certainly if you're in one of these new areas that with the changes coming in, might be worth having a little get together and have all your neighbors come over and, maybe put the word out with them if a developer comes knocking on one of their doors.
Hmm.
Let's spread that information around so everybody can benefit together. Don't let them take advantage of, somebody who's not in the know.
Yeah. Yeah. Okay. Alrighty. So we'll have some more information in the description section of this video. But to everyone who's watching at the moment, thanks very much for visiting us. And what else do I need to say? Uh, mm, oh,
Next,
I've
next,
now.
next, our next episode's going to be the end of year financial year wrap up with June 30th right around the corner. So I look forward to good drill into the fiscal year numbers that we'll be talking about across all the
Yep.
market. Coming soon.
Alrighty. Coming soon. Okay. Thanks a lot.
Thanks, everyone. Goodbye.